Hi everyone, welcome back to this series of market research and AmiBroker tutorials. This one is a really cool one. In fact, it comes from as a question from Nick at my site, who says, "Hi Dave, thanks for these posts. I would be interested in a long short on a market-based exchange traded fund like STW, maybe with a 50-200 moving average cross or similar if you haven't made or modeled it already. It might be attractive as a superannuation alternative for time-poor investors, also for 401ks, potentially in the US as well." Now that is a great idea, especially since there's been so much buzz around the moving average, what they call the golden cross, when the 50-day moving average crosses above the 200-day moving average, and the death cross. It sounds horrible, doesn't it? It's when the 50-day crosses back below the 200-day moving average. And of course, the reason for this is most notably in around August 2015, we did get that death cross, as they call it. And yes, the market has continued to seriously move downwards from there. So, you know, the beauty of AmiBroker is that we can actually test this stuff out, and it's really easy to do. All we do for starters is just go to Analysis, Formula Editor. It brings up our blank sheet or our blank canvas that we can actually lay our code all over it. You know, and this one is so easy. All we need to do is set up our first moving average, and it might be our 50-day moving average. We'll turn it into an array, so we can call that array anything we like. But the bones of it is in MA, which turns blue, so that means AmiBroker recognizes it, and we open up our bracket, and it asks us for what, it tells us what we want. The array we want is the closing price of the last 50 days. And the same thing for our moving average 200, which I'm just going to call it something simple so that, you know, it's really easy to follow in the future. And that's the closing price of the last 200 days. Obviously, I have got a video on the moving average separately to this, so I won't go into it in too much detail. Plus, it's pretty easy anyway. The buy signal will then be a cross of the moving average 50 over the moving average 200. And close that off with a semicolon. And a sell signal would be a cross of the moving average 200 above the moving average 50, or the moving average 50 below the MA 200, for example. That's how that reads. Now what I'm going to do is I'm just going to jump into the analysis window. So it's analysis. You can go to the new analysis window or old automatic analysis. This one floats around, which I like. So that's pretty cool. What I'm going to do is actually just use the current symbol, which is STW, the same as Nick recommended. Let's do it over the last 15 to 16 years. We could do longer. In fact, really, as long as the fund has been available, which is back in 2002. So for the purposes of this one, it'll be about 13 years. For our first test, we'll just make sure it's long only and it's our daily chart, so no problems there at all. What I'm going to do is just click backtest and we'll see how we go. And let's do a report. Let's check out the chart. So you can see it turns $50,000 into about, you know, it basically doubles its money in about 13 years, you know, which is not too bad, tracking that index. And you can see the returns there. The returns on the positives significantly outweigh the returns on the negatives. So we've got -5 or -8, but we've got positive 22 and positive 12, 15 and 22 again. So that's pretty cool. Let's have a look at how it compares to just a normal buy and hold over the same period. That's actually pretty important. So we won't have any position sizing because we've just got one position, one size, you know, one position. And I'll just do a quick back test of that. Let's have a look. So there we go. So we've got quite a significant difference there, which is actually pretty cool. If we were to just buy and hold this fund over the last, you know, 13 odd years, we'd be looking at an end result of about $68,000 from a $50,000 portfolio. You see it rides its ups and downs, you know, all over the place there. Whereas if we go back to the 50-day and 200-day moving average golden cross and death cross, you can see it rides the up moves, and then it really does cut it off during the down times. So, you know, it did have a bit of a drawdown in 2008, as would be expected. But in the meantime, it's sort of cut it off whenever the market has moved down. Now, as a final test, let's check it out, because Nick did say he was looking for a long short idea for this particular one. So if we take our code and we just edit it a little bit, what I've got is I've already set up our buy and sell rules as we looked at before, but now we can use those same rules, those same moving averages, to do our short and cover. So we've got buy and sell, which buy's moving up and sell's moving down. Now we want our short, which shorts or opens our position when it moves down, and covers our position or closes it when it moves back up again. So it's literally just the reverse. We want it to short when the 50-day moving average crosses below the 200-day moving average, and to cover that position when the 50-day moving average closes back above the 200-day moving average. Now, because we've only got one position at any one time, what I've had to do is just tell AmiBroker to buy it if yesterday meets that criteria as well, because basically we are switching from buying to selling, and selling to shorting straight away. And if I've got a day's delay in there, which sometimes you might if you're scanning the market after hours, I've just told it to check it yesterday as well. If I save that, let's have a look, and we'll put our settings to long and short, and just do another back test of the current symbol, which is that STW, and let's check out the report. So now we've got an average annual return of about 6% per annum, 6.5%. Let's see if it improves it even further. And you know what? It actually does improve it further. So here's our end result for our long-short portfolio, looking at about 125,000 at the end of that time frame. This is our buy and hold, if you remember. We rode all of those ups and downs and ended up with about 68,000 from a $50,000 portfolio. And our long only was 101 at the end of the day after about 13 years. And the Golden Cross portfolios still had drawdowns of about 20 to 25%, which is better than your buy and hold of about 50% during the global financial crisis. But it is something to consider, because not everyone wants to stomach a 25% decline in their portfolio, especially as you near retirement. Anyway, guys, I hope that has helped in some small way. That has been an absolute blast. Thank you so much, Nick, for posting that at the site. That is an absolutely awesome idea. And I really, really love the ideas that are floating around at the site. And it's a great camaraderie. I really enjoy the collaboration. I've got another video coming up from some ideas that guys posted on YouTube for me as well. It is really, really cool, and I'm really happy to have all these awesome people watching these videos too. Guys, have a great week. Happy trending until we meet again. Bye for now.